Hey friends, it's Tess from WanderWealthy.com, your virtual money coach, and today we're going to talk about how investors make money, and specifically the 3 different types of income that investors earn when they are investing. If you're new to the channel, welcome. Make sure you subscribe. We've been talking a lot about investing here lately because I am on the brink of launching my investing program called the Invested program. I also love helping people get started with investing, and even people who've been investing for a while create a personalized strategy for themselves that is appropriate for them to invest and feel confident in their investments as they go into the future. So if you want to learn more about passive index investing and building your own personalized investment strategy, you can actually sign up. I have a free 10-day boot camp, which I will help introduce you to the passive index investing strategy, help give you some of my best tips on implementing your own strategy, and tell you a little bit more about the Invested program as you get towards the end of the boot camp. You can go to wanderwealthy.com/invest to get in, and now let's talk about how once you start investing, you'll be making money. So for the most part, people know investing as you find a company, you buy some shares, and you give them some of your money, and then hope that the company makes more money so that your shares rise in value, and then you could sell the shares. And basically, if you started with $1,000, maybe you could end with $1,100, and then hey, you made $100. So when people think about how investors make money, that's basically it. And although that is definitely a way, there are actually a couple other ways that investors make money as well. Heck, you might even be making one form of this income without even investing. We're going to talk about that in a second. The reason I wanted to do this video was actually because I wanted to talk about taxes and how investors pay taxes and how the different income gets taxed. And then I realized that a lot of people don't know that there's 3 different types of income when it comes to investing. So I figured let's break that down in this video, and in the next video we'll talk about taxation, which probably isn't as sexy as I would like it to be. So the first form of income that you make as an investor is exactly as most people think of it. That $100 in the last example that person made by investing $1,000 and then selling their shares for $1,100, that $100 difference is called a capital gain. And that is the first form of income. Now there's actually 2 types of capital gains, which we will refer to this video from the tax video that I'll be recording in the future. There's short-term capital gains and there's long-term capital gains. Basically what that means is if you buy a couple of shares of some company's stock or an exchange-traded fund or a mutual fund, and those shares increase in value, and then you sell the shares and you capture the gains within less than a year, that's a short-term capital gain. So from our first example, if you made $100 off of selling these shares and you did it all under 360 days, then that $100 would be your short-term capital gain. So basically, a long-term capital gain is exactly that, except that you own those shares for more than 1 year and then you sell it after the year has passed and you make money. This can be after 375 days or it can be after 37 years. It doesn't matter. Anything beyond 365 is a long-term capital gain. The second form of income is dividend income. So you may have heard about dividends in the past, but a lot of people don't realize that dividends are a form of income and they're actually treated different than the income that comes from selling shares of your stock and being able to capture those gains, whether it's short-term or long-term. Dividends are pieces of profit that certain companies will pay out because they want to say, hey, thanks for being a shareholder. Thanks for believing in us and investing in our company. When you invest in a company or in an exchange-traded fund, you will see a dividend yield when you're purchasing the shares. And that dividend yield is telling you what percentage of your investment you will get paid out in dividends going forward. Each company has a different schedule for paying out their dividends. They can happen quarterly or 5 times a year, monthly maybe, or sometimes even just once a year. And they're also not guaranteed. So a company can decide, you know what, this year's been a bad year, we're not paying out a dividend. Good luck, shareholders. But for the most part, if a company is a pretty staunch dividend payer, they tend to stick to that routine. The yield can change. At some point, you could buy some shares and the yield could be 2.5%, and another time you could buy some shares and it could be 3% or 1%. So basically everything about this form of income can change, but it can be a really good source of income for people who are investors and really want to make some money regularly. Because dividends are paid out more regularly, you don't have to wait until the shares you own increase in value to start seeing some passive income coming into your portfolio. Now, a lot of people, especially younger people or those who have a long timeline until they really need the funds from their investments, will just choose to reinvest their dividends. And so whatever they get paid out, if it's in the month of April, let's say, they'll just choose whatever amount of money that is to buy some more shares with that money of the stock that they already own. And this can be a really good option for people, especially those who are really trying to grow their stock portfolio. By using some of the dividends that are paid out and reinvesting them, well, you're just adding more fuel to the fire. So dividends, although really great because it's passive income flowing through, even if the stock market isn't doing as hot, are also kind of unpredictable. A form of passive income that a lot of people that are near retirement use or closer to their ultimate investing goals will be in the form of interest income. Interest is something you're probably familiar with. If you have a savings account, or you've ever earned a certificate of deposit, or you have a money market account, or even if you get a little something from your checking account, every year you get paid interest. You may have signed up for a high yield savings account that's giving you 2% per year on whatever money you have in there. Although the interest rate can change, the fact that you're going to get paid interest is much more guaranteed. And depending on the type of security you're buying into, whether you're just putting your money into a savings account, which isn't technically investing, but we can think of it that way in this case, or you're purchasing some sort of fixed income like a government bond or a treasury bill or a corporate bond or a municipal bond, those securities, because essentially you're loaning these institutions money, are going to pay you back with interest. In the investment world, when you purchase these securities, you're purchasing bonds and you're loaning these institutions money, and they have to pay you back the interest rate that you signed up for. These are a little bit more secure securities. So that's why you'll find a lot of people who are getting close to retirement age or in retirement age, or people who are just getting closer to the ultimate end date of whatever timeline they have for an investment goal, more of their asset allocation will be in the fixed income that provides guaranteed interest payments. Now, there's a lot more details that we can go into about all of the different types of investments, securities available, and details about bond interest rates and dividend yield, but I'm not going to go that far. I think the cool thing is to know that as an investor, you get to make different types of income, whether you're doing it for the long term and you're expecting those capital gains from your underlying investment, or you're just looking for some regular passive income through dividend income or interest income. It's all available to you when you get invested. So if you want to join this world of the wealthy, you can come get on board with us and start your investing journey by going to wanderwealthy.com/invest to get into the free 10-day investing bootcamp. I can't wait to see you there, and I can't wait to see you making yourself rich. And until then, I hope you wander wealthy. Bye!